Here on Orange Pill Podcast, and the escape hatches, they're trying to close the escape hatch. We're going to talk about proof of stake. We're going to talk about proof of work. We're going to talk about, I want to compare, this legislation that's been passing through the infrastructure bill. Remember when early in the pandemic, when we saw China do a total clampdown, i.e. they were nailing people into their homes, into their apartment buildings. At least allegedly, who knows how many of those videos are true, but nevertheless, to me, it seems like that's what they're trying to do with basically Bitcoin, right? Well, with the dollar, let's say the dollar in the fiat system, they're trying to nail shut the escape hatch that it is. Like they don't want you, they can't stop Bitcoin, but they could stop the on-ramps into it, the off-ramps, let's say, the off-ramps out of the fiat system into Bitcoin. So that's my theory about what's happening with the legislation that they're trying to pass.
Right. Yeah, well, I think that's true. So I guess that's what they're trying to do. They're trying to stop people from leaving fiat money by attacking the off-ramps into Bitcoin. And it is like the lockdowns and in China, the images that we saw, the government bolting people into their rooms, and it gets all very disturbing. The thing is that there is very little hope for success in stopping Bitcoin. The thing about Bitcoin, as we've been saying now for 10 years, 11 years, is that it's designed to be attacked. It's just a matter of time until U.S. Congress, U.S. senators got more, into the attack position. And this is great. This is exactly as Satoshi designed it. Everything is proceeding as scheduled.
Yeah, I think we've raised this before, but I think it's like, in the olden days, thousands of years ago, when the baby king was born, they used to have to hide it, right? From the, turmoil at the top. Once one emperor or king died, like his brother or uncle or cousins would jockey for position. And the first thing they would do is try to kill the children of the former king. So they would always, hide away this, the baby king, that would be king. So Bitcoin luckily was not stopped. I think it was Jason Foreman or Austin Goolsbee from the Obama administration who recently had said we should have killed it while it was a baby. And it was too late. But now, even this legislation where Janet Yellen is clearly on the side of a clampdown on crypto. And my feeling is that clampdown on crypto is basically paving the way for what they want, which is the surveillance coin, the panopta coin, that is the CBDC, the central bank digital currency, that they want you to have to use that. And not only does it watch everything you do, but of course they could deplatform you, demonetize you, starve you to death without any hassle of a justice system. But they could also observe you if you try to leave the system, i.e. if you escape to Bitcoin.
Yeah, exactly. So it is like China. Use the China analogy again. China has a social credit score. They have 24/7, 360 surveillance on all citizens, and they're collecting it in those massive databases. The cost of maintaining a database and creating a database, of course, the cost of that have plummeted, along with the cost of CPU or processing and the cost of transporting data. That's all crunched down to zero. And in the wake of that, we've had two phenomena. One, the state decided to use that to get stronger. Two, Bitcoin decided to emerge and take on the state. So now Bitcoin versus the state, this is the battle we've been waiting for. And Bitcoin has already won the battle. It won on January 3rd, 2009, the birth of the Genesis block. So this is now just going to be watching the state actors panic and just go crazy. It's more specifically when it's really interesting in that the comments by Janet Yellen and others really come out almost in favor of proof of work versus proof of stake or DeFi. And so a lot of people say, well, and I've tweeted about this, and I've said, hey, this is great because proof of work is great and proof of stake is garbage. And people have come out and back and saying, hey, you've got to be, you shouldn't support the state attacking anything.
Yes.
And that's obviously not the point I'm making. I'm making that proof of stake and DeFi was never solid enough to withstand any attacks. And that's been obvious since day one. And all the supporters and promoters of DeFi and proof of stake, either they knew it and ignored it or didn't know it. But the fact is that they don't have what it takes to fight off an attack. So all that capital that's tied up in these garbage coins, and it's more than $500 billion or so, that's all going to migrate over to Bitcoin, which is great. And pretty much everything I've been saying, and we've been saying for quite some time, is that all the altcoins are really going to die. That's the history of all altcoins, is that they all go to zero, just like fiat money does. And that's it.
Let me jump in with my thoughts on that, what you just said. So in the first place, Bitcoin may have started as a technology, and cypherpunks wrote code. They wrote the code that birthed Bitcoin. However, Bitcoin became money and a store of value. And that's only the third time in history, right? So we had gold, then we had treasuries. Then if you read Nick Bhatia's book, right? Now we have the first genuine innovation in 5,000 years in terms of how amazing a store of value Bitcoin is compared to gold, which was the best previous store of value. So that's why Bitcoin is not competing with any of those other coins, right? Those altcoins, shitcoins, whatever you want to call them, DeFi. Those are DeFi projects that are easily reproduced. Bitcoin can't be reproduced, right? It's not possible. So because all those altcoins are technology, are software, are reproducible, that's where Janet Yellen, and these guys have studied this a long time, for years now. All sorts of researchers at the Fed, at the central bank, at the Treasury, everything. They've studied it and they know what it is, and they know they can't kill Bitcoin, but they know that all that money in altcoins and DeFi, well, they could give that to their buddies on Wall Street. Those could go to Wall Street, right? The DeFi projects, and they'll get the cut of that. We know from the Bank of England's central bank digital currency paper that we talked about a few weeks ago that they want to make sure that the banks continue to profit. And the banks will need a new profit center once the central bank introduces a central bank digital currency. Because remember, Fed coin, surveillance coin, panopticon will go directly to your bank account, right? So the banks on Wall Street will need another profit center. And this will be the gambling and speculation side on these DeFi projects. And the stable coins are the other thing targeted with this legislation. And it was supposed to be voted on last night. It didn't happen. And so when we're recording this on Friday afternoon, it hasn't yet passed which of the amendments will be adopted. But either way, the point is they want to stop the stable coins because that's their competition to the new digital coin that they want to introduce from the central banks.
Right. And to follow up a little bit also, this idea of toxic Bitcoin maximalism as somehow being bad. Okay, the toxic Bitcoin maximalist like myself, the reason we're so toxic and so maximalist is try to help people understand that if you're holding something other than Bitcoin, you're going to get wiped out, and sometimes that message, you can't say it gently and smoothly and have an educational course and spend 25 weeks going down the road. If the building's on fire, you gotta get people out of the building. And that's the urgency of the situation. Furthermore, the behavior of the altcoiners and the shitcoiners has been deplorable. For example, in El Salvador, when the country made Bitcoin legal tender, who were some of the fiercest critics of this move? Were the altcoiners and the shitcoiners. I mean, that's reprehensible. So now they're going to get their ass kicked, which they should.
I might add on top of that, that's the other important point with this legislation. Why some of the shitcoiners were complaining that it looks like Janet Yellen is basically making Bitcoin a protected class, proof of work. Well, they couldn't introduce Bitcoin into it really because of UN protocols, right? UN law, the global laws regarding money. So El Salvador did make Bitcoin legal tender. That did protect Bitcoin in terms of, it didn't protect Bitcoin as its own thing, and it's one since, as you said, January 3rd, 2009. But it did prevent the U.S. government from introducing legislation that could outlaw any global legal tender in a certain country.
Well, that's an amazing point. And it shows the timing of El Salvador's move and the work of Jack Mallers in particular, who spent 3 months in El Salvador setting that all up just months before this fandango in Washington. I mean, it's incredible. The timing of Bitcoin has always been perfect, because it's perfect money, perfect price discovery, perfect protocol, the perfect commodity. It's always been perfect. It's always perfect, and it will continue to be perfect. And this is something that a lot of people have trouble dealing with because they don't understand the concept that perfection might even exist. Most people live in a gray area of moral relativism and kind of hacking their way through life as best they can without any inspiration whatsoever. But those people are going to come to the table, I'm pretty sure. Some of them will, some of them won't. I mean, it's like Noah's Ark, right? Some got on, some never made it.
So those people who are complaining that they won't be able to hold their particular shitcoin or their bags of shit that they own, you'll still be able to speculate. You'll still be able to do all of that and get wrecked. But, Goldman Sachs or JP Morgan or Merrill Lynch, they're going to be the ones that take their cut. They're the house, and they're going to always win. Just like right now, the house still always wins as well. The pre-miners, those who pre-mine those shitcoin bags that you hold, they're the ones that won. But now it's I think the central banks and the treasury see how lucrative it has been. It has minted quite a few billionaires just by issuing pre-mined coins to speculate on. So they're going to, in a mafia sort of system, they're going to say, like, you can't do that, right? Get out all you. I'm not going to name all the billionaires who pre-mined their shitcoins, but they're going to, that's going to be the business of JP Morgan, Bank of America, Goldman Sachs. They're going to come out with their own shitcoins for you to speculate on, and they'll get richer and richer. And, that's a system we've always had, but there's been a pretense of this like legitimate system of US dollars, and there's a real financial system, and there's a real economy. Well, now they know that we're so gamified now that we don't even care. It's not a pretense anymore. So like, at least now they could do the CBDC. You don't need the banks. Just use them as gambling operations.
Right. Well, I noticed that Coinbase stock today is weak while Bitcoin is surging higher. It kind of speaks to the point I made about Coinbase now for a long time, in that it's essentially a gambling establishment. It's a casino. You're betting on these shitcoins over a Coinbase like you would bet on numbers on a roulette wheel. And when they say, oh, we're going to start trading such and such a shitcoin, it's like saying we just added a number to our roulette wheel. They're not licensed to be a casino, by the way, in California, so that's another issue. But the market's telling us now, Coinbase bad, Bitcoin good. Coinbase, I think, could be the MySpace of this entire industry. It's highly inflated, overvalued, and it's about to get its ass handed to it.
They have relationships with those banks that are now going to have the monopoly on the shitcoins, right? So I think they might do well in that, offering Goldman Sachs coin, JP Morgan coin. You could speculate on whatever of one of their coins you want. And I was thinking of this proof of stake versus proof of work world. And, there's only one proof of work coin, right? There is only one, and that's Bitcoin. And there's only one layer one money, and that's Bitcoin of the whole crypto space, right? So that's Bitcoin. But I was looking at what the problem with proof of stake and what you see in the proof of stake economy that is the US economy, because the billionaires run everything. The oligarchs run everything. We know that from studies that was just out a few years ago. Remember that the ordinary citizen has exactly zero impact on any government policy, because it's the oligarchs who run everything. And then look at this pandemic, right? Everything gets shut down, lockdowns. But trillions get printed not just by the central bank this time, like in 2008, 2009, but also by the government. That's like really hot money, right? That's real cash. And okay, everybody got these enhanced unemployment benefits. Some people got money deposited directly into your account. You're getting a taste. They're giving you a foretaste of what CBDC, hot cotton candy, really tasty money is going to be like. All the free money. If you're a good citizen, you're going to get some of that hot money, right? So, however, like a lot of it disappeared. We talked about the half of the enhanced unemployment benefits went overseas. The PPP loans, half of it got taken up by billionaires. A lot in the crypto space, by the way, the crypto proof of stake space, right? And their argument was that they deserved it, right? Because they have a bigger stake. They put a bigger stake in the system, so they get to plunder it more. That notion of that the more you own of the system, the more you deserve. We saw the rent moratoriums extended by Joe Biden this week. Despite the Supreme Court saying he couldn't do it, he did it anyway. And yet, why are they having a rent moratorium? Because if you recall, and all of these schemes, all of these proof of stake, all the proof of stake coins are always coming up with a fancy new thing we're about to airdrop some money, we're about to fork, we're about to upgrade to a new protocol, or all this sort of stuff to keep you like delusional and eager to participate in this system. But remember a few months ago, last year, we passed the $47 billion emergency rental assistance program. It's supposed to pay these rents for all these people that haven't been paying rent for the last year. Well, only 3 billion of it, or about 7%, made it to the end recipients. So where did the other 44 billion go? That's proof of stake for you. They're like, well, just like the people who say, well, I deserve the PPP loans because I pay more taxes and I'm wealthy and blah, blah, blah. So here they're like, the same thing happens, right? That nothing could happen between, like there's this layer of, there are a layer of oligarchs between us and the government. That's the proof of stake. They have their stake is in the government. They own the government. So the government says, okay, here, we're going to tax everybody, the crypto market. We're going to give you 47 billion to help the people, but we have to dispense it through these oligarchs like BlackRock and stuff like that. And it never makes it to you. Okay. They're like, okay, we'll trickle down 3 billion of it to make it look like we did something.
Yeah, well said. That's exactly the story. Proof of work is, the people in that part of the business are no different than the fiat money oligarchs, and Bitcoin, the market is really showing who's a closet shitcoiner. Bitcoin's making a big move. How is anybody going to stop the fact that this is a global tier 1, immutable, uncensorable, unconfiscatable gold surrogate that's going to $200,000-$400,000 a coin, and there's no force on planet Earth, and probably no force in the universe can stop it. I mean, how are they going to deal with that? And now we're going to see how they're going to deal with it. It's going to create some face melting moments. We've seen the low grade autocrats have mental breakdowns, like a John McAfee, for example, or the Calvins and the Craigs and the Rogers, those low grade, low rent plutocrats who were egomaniacs early on. We saw what happened to them when we saw how their mental stability cracked. Unlike myself, I'm a picture of mental health, as you can tell. Now we're going to see on the senatorial level and the presidential level and the world leader level, the IMF, the World Bank. We're going to see how, the world is run by the Calvins and the Craigs and the Rogers. They just have nicer offices and nicer suits. But the Bitcoin derangement syndrome is hitting that layer of the globalist, and we're going to see their faces melt off. And this is going to be the most entertaining thing we've ever seen.
I also might point out, of course, that if you look at the global, if you look at Wall Street and if you look at what's happening in the United States in terms of the crypto market, the 3,000 cryptos, there's only ever Wall Street is only providing ETFs, like applying for ETFs or offering services almost entirely related to Bitcoin, right? They're wealthy clients. They're not putting them into some pre-mined shitcoin to make Brad Garlinghouse richer. Like, they're not doing that. They know that's a scam because Wall Street created these sort of scams. They are the original pre-miners, like with these all those mortgage-backed securities and CDOs and stuff that blew up the global economy back in 2008. They've already done this. They know this. They know exactly what those are. They're not putting their clients, their wealthy clients, into it. Perhaps one day, yes, as once this legislation passes and they get rid of all these DeFi and tokens, they'll issue their own pre-mined shitcoins for you to and dump it on their dumb clients rather than their smart money clients. But also you have the mining in Texas. And, Texas is a pretty powerful state. They have a lot of electoral college votes. It's a big part of the US economy. And so they have a huge stake in Bitcoin mining. So obviously they're going to be powerful in terms of where the legislation goes in terms of restricting Bitcoin mining. But all the other stuff is proof of stake, right? It's all just nobody mines any of the other coins, any of the other even proof of work coins, as we've seen with BSV. It's a tiny, tiny, tiny fraction of US of Bitcoin hash rate because nobody wants that shitcoin, right? So there's no market for that. There's no protection, innate desire by senators and legislators not to destroy that industry because there is no industry in all the shit coins.
All right, here's a thought experiment. So let's say this legislation starts to interfere with the off ramps or the on ramps into Bitcoin. And so in America, people are having difficulty getting on and off into Bitcoin. But of course, America is 4 or 5% of the global population, right? 95% of the world is not American.
Yeah.
Okay, so the rest of the world, Nigeria, El Salvador, Central America, Africa, right? They're taking Bitcoin to 100, 200,000 a coin, right? And Americans are like, we want it, we want it, we want it. Well, we're coming up to the midterm elections in next year. So this will impact the midterm elections. The people who are in Washington who favor Bitcoin will get elected. And that leads us into the 2024 presidential race. And so we could have a Bitcoiner in the White House in 2024 at this rate.
Yeah. And I mean, the other thing that happened this past week was Liz Warren was on Bloomberg, I think it was, perhaps CNBC. And she mentioned that, okay, the good thing about crypto, it could help the unbanked, but we need regulations to protect these people. And you're like, the reason why you have millions of people unbanked is because of all your regulations, the know your customer AML sort of stuff that, no bank wants to deal with it for somebody who only has $500 a month to put in their bank account. They're like, well, it's not worth it for us. Right?
Quick insert there. Yep. Wells Fargo last week or 2 weeks ago actually shut their consumer lending division to all retail customers because it wasn't enough profitable for them. Liz Warren, what about that? I mean, the banks right now are disenfranchising people out of the banking system. That's the problem. Because of her regulations. Because of your regulations. That's the problem, right? Bitcoin is the answer to that problem.
Right. And we have some answers for you talking about Bitcoin, and talking about mining and selfish mining. And of course, the most fragile person of all this past week has revealed the fragility of Nassim Taleb with the Edward Snowden tweet stream about, which was just devastating, right? I mean, everybody has seen this in the Bitcoin space, but Edward Snowden has just come to it. And when Nassim Taleb was attacking just viciously Lynn Alden, well, Edward Snowden looked into it and he had all these screen grabs over the past few years of Nassim Taleb projecting what happened to him as a child. He was clearly abused, right? And while we feel bad for that, he's an adult now and he should get help rather than just abusing everybody else for the abuse he suffered. So he calls everybody an idiot, an idiot, an idiot, an idiot, an imbecile, a moron. So there's hundreds of these going back. But this fragile ego for a guy who wrote about anti-fragility, well, I think it's obviously a topic that's near and dear to his heart, right? Because he is very fragile, right?
Apparently, he's the guy who was sitting in his high chair and his mom was trying to feed him some baba ganoush. And he was saying, I don't want my baba ganoush. I don't want my baba ganoush. No, you must have your baba ganoush. And it created such a resentment that he went on to totally torch his career as an author and a public intellectual 50 years later, and we're seeing the meltdown in real time. That meltdown, by the way, is going to be seen in the Davos crowd very, very soon. They're going to have a mass meltdown. Jamie Dimon, he was interviewed on TV, and they said, Jamie, you said a year ago that Bitcoin was, terrible. Now you're offering it to clients. And he's like, well, I still think it's bad, but, the clients want it. What? I mean, that's malfeasance, dude. You don't actually have to comply with the Securities Act of 33 and 34? I see. You mean like MF Global, where you jumped the queue and got all your money back, but it's completely illegal and you've committed massive fraud over the years and paid billions in fines? That guy? Yeah, Jamie. Fuck you.
Right. Well, we're going to talk to a former friend of Nassim Taleb, who actually taught for this course that Nassim Taleb, and he's a mathematician. His name is Ricardo Pérez-Marco, and we talked to him. There were a lot of fireworks. Max is fired up. He gets fired up, as you can see, about these Davos men like Nassim Taleb. So check it out.
Oh, wow. This is going to be exciting. A bit unusual, too. I'm looking forward to this. Time to turn to Ricardo Perez-Marco. He is the Director of Research at the prestigious National Center for Scientific Research in Paris and organizer of the Paris Crypto Finance Seminar, Stacy.
Right. Ricardo, well, you came across my screen on Twitter when, of course, this whole flame war with Nassim Taleb against Bitcoin, he singled you out because I guess you did work with him on his platform. You taught some Bitcoin related course, but you're also a mathematician. And I think he seems very fragile about your, critique of some of his work, including this Bitcoin black paper, which he just published, the name given to his paper, which was titled Bitcoin Currencies and Fragility. So he says, let's talk about the number one fundamental thing I think that you really addressed. And you guys were speaking on mathematics sort of terms. So you might need to clarify for us because, he would call us like idiots and imbeciles. So in terms of mathematics. So he said,
did call me idiot also.
Oh, he called you that? All right. So we're all idiots here.
Yes. Except him, I guess everybody's an idiot. But anyway, I'm not really interested in name calling, right? So I just wanted to point out that there was some problems with the formulas and the mathematical arguments that he was supposed to give in his paper. I mean,
right. I actually have a photo, a screen grab from, he also did an accompanying video to explain why his paper made sense. And he's standing with, a cardigan around his shoulders to look very academic in front of some mathematical formulas there. So trying to look very intimidating for everybody. But let's address one of the number one issues I think that you had with him, and correct me if I'm wrong, but that he says that Bitcoin should be worth zero now, because according to him, the probability of it being worth zero in the future is 100%. So you're a mathematician and a professor at some point. Like, what do you, what would you mark this on his grade in terms of what, if he submitted this as a paper?
Well, he pretends to give a proof that the price should be zero. I mean, so I started just discussing the mathematical part because he gives other reasons, he makes other assumptions that are not part of mathematics, but it was very easy for me just to look at the mathematical part and point out where this doesn't work. Well, I mean, as you know, there is no proof that an asset is worth zero mathematically. I don't know of any example. So in any case, this is interesting to look at. And essentially, his argument, I mean, I can explain it without formulas. Well, he's using a formula, an equation about price and cash flow. This type of formulas that economists like are in some sense circular, because in this formula, there is the price that appears, there's the cash flow, and then there is some expectation, which is a mathematical notion, but it's conditional to the knowledge you have, to the information. So I can give you a simple example. I mean, if you throw a dice, you expect every face to be equally, every number from 1 to 6 to be equally probable. right? Because this is, if you don't have any other information, you assume that the dice is fair. But if you have more information and you know that the geometry of the dice is not cubic, you know that the probability will be different. It's not equiprobable to have all the numbers from 1 to 6. So this is the type of formula he's using. So his formula depends, gives a relation between the evolution of price, depending on cash flow and the information you have. But these type of formulas are really useless.
Right.
Because,
Let me jump in here for a second. So there seems to be some really interesting fundamental disconnects, I guess you could say. First, a quick question, Ricardo. Economics as a pursuit, as a study, does this qualify as a hard science like physics, or is it a soft science like sociology?
Yeah, it's more on the side of soft science. I mean, there are different types of economic research, right? That is more or less scientific. From my mathematical point of view.
Yeah, the difference being that in a hard science, you can run an experiment repeatedly and get the same results. In economics, you can run the same experiment repeatedly and get different results every single time because of the psychological component of economics, because it's a sum total of those who are participating in the economy. One of the fundamental mistakes that Nassim makes, and has been making for years now, is that he's trying to apply hard science to markets and to economics in a way that has been shown to be an unworthy, impractical, and almost nonsensical approach. Because look at this statement. It's an absurdity. He says Bitcoin should be worth zero now because it's going to be worth zero in the future. I can say with equal and 100% certainty that Bitcoin should be worth $1 million now because it's a certainty that it'll be worth $1 million in the future. I can say that with as much certainty. Now, both of those statements come together in something called the market price, which is today's price, which is the sum total of all participants in the market, which is a soft science. We don't know what the outcome's going to be, full stop. He's trying to apply physics, hardcore mathematics
he's trying to articulate a model, right? I mean, you can try to modelize, even if it's not a correct model. I mean, there are one part is modelization and another part is mathematics. So you can make, for physical phenomena, you can make a model and check it, with measurements. The model can fit better or worse the reality. In the case of an economics, it's much harder to make good models. So what I'm pointing out is that this type of equations, I know no trader that takes advantage of these equations of the relation of price with cash flow, with conditional information, because it's just a circular equation. Indeed, you can use it to get information about the information you have. So indeed, it's very difficult to pull out anything interesting from this type of formulas. But even assuming this formula is correct, the mathematics that he develops after that, assuming that the model is correct, is wrong. I mean, he's making certain assumptions that are arbitrary. So, for instance, he's making the assumption that there is an absorbing barrier. So what this means? This means that when the price of Bitcoin reaches some level, it should go to zero. Well, okay. Well, why is this true? He tries to articulate an argument saying that you have some costs of maintaining the network and mining, etc. But after all, you have other assets and very similar assets that do not have a cash flow, like other fiat currencies that have the same problem. I mean, you can put it in the same model, because the fiat currencies need also a maintenance. You have central banks, you pay salaries to people that work on central banks. For gold also, you need to have some custody and security involved on the custodial part of gold. So this type of argument that, well, I don't see really the argument why there should be an absorbing barrier. But even is worse, because at the end, he's using this assumption to just show that on a fixed period of time, you have a fixed probability for Bitcoin to go to zero, to fail. Okay, so the period of time is arbitrary. This is a kind of a standard mathematical approach you discretize time. Say you can look at the periods of time for 1 day or 1 month or 1 year, whatever you like, and then you make the mathematical model of the evolution equation, right? So after all, his assumption about the absorbing barrier boils down to assume that you have a fixed probability of Bitcoin to fail on any given period of time. And we all know this is wrong, because you can say, well, there is a certain probability that is not zero that Bitcoin will fail in the next year.
Yeah.
Right?
Okay. I mean, before even getting into the specifics of the mathematics that he's using, this is a case of professional malfeasance, because he's committing professional fraud. Because, okay, I understand you're saying there's nothing wrong with trying to come up with a model that might work or might not work in any given instance, but you know that the fact is that markets only work if there are no models that do work. It's called the unpredictability of markets are what give us that magical thing called capitalism. If there was a model that could predict outcomes with 100% certainty, there would be no capitalism as we know it, full stop. He knows it, and he's practicing fraud. He's fraudulently pushing a theory that goes that he knows he's doing it.
Look, he's trying to make a model, right?
Look, I can try to go out and date the supermodel anywhere in the world using a mathematical formula. Does that mean I'm going to go date a supermodel anywhere in the world? I mean, I can try. It's not going to work.
You're not going to find a model that is perfect, but there are models that are very useful. I mean, you can make models for modelizing even the Bitcoin price that are useful for trading, and traders that are kind of scientifically oriented, they use them.
And 100% of them fail. 100% fail for 500 years. 100% model predicting markets fail. You show me one instance of a model that's worked in 500 years, and I'll send you 10 Bitcoin right now.
Okay, Edward Thorpe made a model before the valuation of options that worked for him. I mean, he knew better than others how to evaluate options before Black-Scholes. So, I mean, there are models, and people will models.
Right, you're modeling risk, but you're not modeling outcomes. You're just modeling risk. You're not modeling outcomes.
You know, after it's the same, because if you have a model for the risk, you have a model for the value of options, and then you can arbitrage this. I mean,
look, the options pricing volatility formula by Black-Scholes prices in the volatility versus the underlying security to give you a market price, but there is no outcome that is predicted by those models. It's 100% dead certain. Anyone who thinks there is cuckoo land.
No, but I agree. There's no model that is going to predict the Bitcoin price in 1 month. I mean, there is a randomness. What the best you can hope is to have a model that gives an estimation of likelihood and probability of the Bitcoin price giving on a range, right? Or any asset price. I'm not. No. You know, there are models. The only thing, the hard part of mathematics is not just doing the math. Is knowing the shortcomings of the models. Okay, and he's going all the way pretending that his model that is wrong can prove that the price of Bitcoin is zero. So essentially, what I did address in his manuscript are the mathematical points where he's clearly wrong. So one of the points I was mentioning is that he's assuming, after all, that on a given period of time there is a fixed probability of the Bitcoin price to go to zero, and we all know that it is not the same probability of the Bitcoin price to go to zero now in 1 year that it was in 2010. In 2010, nobody was mining. People didn't know about Bitcoin. The network was sustained essentially by Nakamoto and a few other people. It was very likely that it will go down to zero because people just would lost interest. There was no market. I mean, so and we all know that the probability of Bitcoin to fail is going down with time. I mean, longer it exists.
No, that's not actually true. Because Bitcoin fulfills a human need for having hard money and to trade, which has been with us for 400,000 years. So that's the only way. Even if humans went extinct, Bitcoin would still be going. right? So we don't need to worry about Bitcoin.
Yeah,
right?
I mean, it's a living. The network is a kind of a living, living by itself. But
Absolutely.
after all, if there are no humans, there should be robots that trade in order to have a value for
It
Bitcoin.
is a
No, I
robot.
mean,
It already is a robot. That's
yeah,
what
it is a
Nassim Taleb
robot.
is such a freaking moron. He doesn't even understand the underlying basics of the algorithm that
No, but I
functions
mean,
against this black paper that
this
has
is kind of a
destroyed
general
his
criticism.
career. Destroyed his career. He's made a
No,
mockery
no,
of
I
this
mean,
man.
okay. Look, he's. I think he's taking advantage of the fact that Bitcoin behaves with successive bubbles, and right now we are in a bubble, and we can expect the Bitcoin price to go to $100,000 or $200,000, and but then it will crash. It will crash to 60,000 maybe, and will stay there for 2 years. And this has been the dynamic so far. It's a succession of bubbles because it's. I mean, I have a kind of study and analyze this from a more mathematical point of view, and I'm originally from the field of dynamical systems, right, where we study evolution of chaotic systems for which we don't have. We cannot solve the equations, but anyway, we can study the qualitative behavior, and so far, so what we have is an adoption, a monetary system in creation, and of course there is big disagreement between people about the value, and this gives you a lot of volatility. So and because we have these halvings, we have a scarcity in the market every 4 years that provokes these bubbles. And well, I mean, I think he realized that. So in some sense, I think he's kind of taking advantage of saying, well, he wants to be the one who predicts the Bitcoin crash. But we all know that the Bitcoin bubble would crash. I mean, it has been, I know Bitcoin since 2011. So I remember in 2011, it went from $1 to $32, and then it crashed again to $1. And then later in 2013, it went to 250, etc. You know the bubbles that we have seen. It's not something new.
So you're talking about the Lindy effect, essentially, that
well, exactly. The point is that assuming that the probability is the same for each period of time is contradicting the Lindy effect. I mean, the Lindy effect says that something, the expectation of perduring of something, of a technology, of anything, of books, etc., in the future is proportional to its life, to the length it has lived. So we should expect technologies that have perdured during a long time to continue to perdure over a longer time. So, for example, the wheel, we don't know who invented the wheel, but you don't expect the technology of the wheel to disappear next year. Okay, essentially because there are many machines that work with wheels, but there are all sorts of technologies. And then I made this argument that he's assuming this constant probability of failure of Bitcoin, and Bitcoin is getting more resilient. Indeed, Bitcoin is anti-fragile in his terms. Each time there is a problem, we fix it and we make it better. So the probability of perduring and not failing, at least from the technical point of view, is the probability is going down to zero.
So
so
like in terms of that Lindy effect in technology, Max and I live in North Carolina. The first flight happened here. So in those early days of the Wright brothers, it wasn't certain that the technology of airplanes would work. And the New York Times wrote pieces about how this was an absurdity and nobody's going to fly and this will never happen and you'll never be able to cross the Atlantic. Nothing will happen. But yet we're still here and we're flying around and,
and we expect flying to continue for another 100 years, probably. I mean, maybe it will be replaced with a better rocket technology or whatever. That's life. Things get replaced. But the fact that Bitcoin has survived during 12 years, it certainly means that the probability of surviving another 4 or 5 years is more likely than before, than in 2010. So already this assumption that he makes contradicts one of the principles and the ideas that he sells in his books.
Even human technology, even the technology that is humans, like the statistics show that like the longer you live, the more likely you are to live past the average life expectancy. So
well, yeah, that's a mathematical effect, but in some sense, is something that has perdured over some time is harder to replace. And so for sure, we know that there's a probability that Bitcoin gets replaced by something else, but another cryptocurrency or another technology or another idea. That's fine. But so far, until 2009, nobody was able to create a decentralized currency. And the fact that we had this first idea that is great. I mean, and indeed, in the end, it's a mathematical idea because it's a protocol, it's an algorithm for consensus, for honesty. If you have a majority of the network that is honest, you get an honest consensus, which is great to be able to build a protocol and an algorithm that does this. This is a great discovery, and certainly, and I believe that this is going to impact many, not only economics and finance, but many activities in human life, and it's not going to disappear next year. I mean,
right.
sure.
Okay, that's all great. Bitcoin is here on the topic of Nassim Taleb's professional malfeasance. He writes in a section called "The Vulnerability of Revenue-Free Bubbles." A central result, even principle, in the rational expectations and securities pricing literature is that, thanks to the law of iterated expectations, if we expect now that we will expect the price to vary at some point in the future, then backward induction, such a variation must be incorporated into the price now. Okay, so he just reinvented the discounting mechanism, right? He just said, markets are discounting the future. And that's backward induction.
He's assuming the perfect market hypothesis that we know that that is not satisfied. I mean, all the contrarians investors know that the perfect market hypothesis, that economists like this perfect market hypothesis because they allow them to write down formulas, but they do not fit to the reality. The market is as you said, is much more complex. There is some psychology involved, and sometimes there are rational expectations, but also irrational ones.
Right, and the resolution of all that is called the current price, right? Yeah, he's just restating the verbiage that you would find in any first semester college economics and finance course, and putting in a lot of word salad and garbage, academic garbage. Let's call it what it is. It's garbage. And he's claiming that this is first of all an original thought, and second of all somehow relevant. It's not.
He's doing what many economists do. I mean, you remember the Krugman papers in 2013, and you have a lot of economists that do this, and I'm surprised because he's one of the critics of this type of reasoning. I mean, he criticized very much the economists for doing exactly what he's trying to do. And I'm personally, I appreciate him in the sense that I like his books. I like how he sold his ideas. He hired me to lecture about Bitcoin in his courses, and I have some appreciation for this. But he's too stubborn. I mean, he's rigid. He doesn't want a dialogue. And I was, just pointing out mathematical facts, and we can discuss it. And when everybody has the right to make mistakes. And if you make a mistake, you just recognize that it's a mistake. And sometimes you can save it doing some other math or whatever. But what you don't do is to call an idiot the person who takes the time to read your paper. Right. I don't know. He has a problem with Bitcoin that I don't know. I don't understand really. I mean, he apparently had a problem with Seyfedan or whatever. But this has nothing to do with math. I mean, you should not behave like this if you just discuss mathematically.
I think he has a problem with safety, and something happened. He broke him on the BSV while we're recording this interview right now. Actually, is undergoing a 51% attack that has forced it to reorg 3 times in the past few hours. So it's that thing's really toast. That thing's really going to zero. But in terms of, what Taleb gets wrong as well, it's like he always berates everybody as being an idiot and has this whole IYI thing, intellectual yet idiot. And yet here he is dressing like an intellectual, standing in front of a whiteboard with all sorts of mathematical formulas and being an idiot because he states things that are just obviously wrong, that anybody with their own, you don't need to have an advanced degree. He talks about Fat Tony all the time and how Fat Tony is so much smarter than all these academics. And yet he asserts that Bitcoin cannot operate as a reliable inflation hedge, and worst of all, does not constitute, not even remotely, a safe haven for one's investments, a shield against government tyranny, or a tail protection vehicle for catastrophic episodes. And yet, like, we have Nigeria and El Salvador right there in front of your eyes doing exactly that. Look at Nigeria, the second biggest volume trade of Bitcoin. Why? Because they got cut off from the US dollar system. They need dollars. They have entrepreneurs. They have loads of fat Tonys there. None of them are fat. They're all thin, and they're all called Obi, but they're not fat Tony, but they're similar to fat Tony in that they're just entrepreneurs getting by, and they're going to Bitcoin. Bitcoin is solving a problem for them.
Yes. Bitcoin has a lot of sense and different meaning in different countries depending on the economic situation. Now, I'm going to say something in his favor. It is true that Bitcoin is going to go to zero in the long run, because in the long run, the universe disappears. What I mean is that when you make these assertions, you should look at the time frame. Of course, everything is going to zero for the age of the universe, when the solar system, when the sun becomes a neutron star and the earth disappears and the solar system disappears, so we are no longer there, and there is no economics. So I think it's important to determine what type, when you do a mathematical argument, to determine what is the time scale you are dealing with. I mean, there are very surprising mathematical theorems that are true, but you will never see them because it happens in the long run. And the long run is several times the age of the universe. And there's a famous theorem by Poincaré, which is the Poincaré recurrence theorem, that says that, well, you have a closed box with a gas, then if you wait long enough, you will have all the gas on half of the box. All the molecules of the gas that bounce in a random way, they will end up at some moment all in half of the box. Well, you never observe that. This is a mathematical theorem, but it will take many, many times the age of the universe to see that. I mean, it's extremely unlikely. So this is the same type of thing. When you try to make this type of argument saying that in the long run, this should go to zero, well, you should look at the time scale. But it's even worse. If you take his equations, indeed, if you believe his equation and you try to make an argument, there are two solutions. The Bitcoin price could be zero or could be infinite. And after all, what he's looking, the Bitcoin price, after all, is just the ratio of the consensus Bitcoin value quotiented by the consensus dollar value. And when you measure things with the dollar, the price of everything is going to infinite because they keep printing. So
yeah, that's what I said at the beginning of this discussion, right? That Bitcoin has no top because the dollar has no bottom. The only thing going to zero is the dollar. That's guaranteed to go to zero because every fiat money ever created has gone to 99% or 100% loss. The thing is that Nassim.
Well, this is my Vitalik theorem that every fiat currency, the price will go to zero if you don't stop printing. And this
they
is what
all
we
have gone to zero. We're not debating that maybe it goes to zero. Not a single one has ever escaped going to zero. That's 300 years
even
of
the
evidence.
Roman coins, because they keep devaluating the content of silver and gold.
Right.
By the way, I follow you since the time I trade gold since for about 20 years. So I follow you from that time, right? So,
right. And we started buying Bitcoin at $1. And everybody we know is stinking rich.
Same here.
But I don't see, the thing is Nassim is doing, and this conversation is also doing, is mixing physics with economics. The two do not mix. They are mutually exclusive. They are mutually exclusive.
Don't be so radical. There is a field that is called econophysics.
And it's stupid. It's a field where idiots.
There are hedge funds that make money with that. I mean,
in the short term, no hedge fund has ever consistently made money over the long term using any model.
Yeah, I mean,
that's
Renaissance is making money. I mean, has making money for a long time using scientific tools. I mean,
look. Every time you dig into one of these hedge funds and you look at their models, you find what George Soros, who's the king of them all, talks about reflexivity. And if you buy into a market and you become as big in the market, you essentially guarantee the outcome because you are the market. And if you can borrow money at 0%, any hedge fund that's not making money, borrowing money at 0% should be taken out back and shot. because there's no risk at 0% money. And of course they're going to make money. And they'll say, I didn't just steal the money from the Fed. I'm using a model. This model shows me how much money I'm making. It's a freaking lie.
You can make models to see how these hedge funds behave and take advantage of it. Don't be so negative.
In the short term, but consistently it doesn't work. And that's a guarantee. Show me an example. And there's a 10 Bitcoin prize for you. If you can give me an example.
You have to adapt to the market.
Never happens. Sorry.
No, but there are scientific ways of having an edge. I mean, not a big edge, but
not in economics.
Okay.
We disagree on that.
Let's return to Bitcoin, because I want to. Nassim Taleb also argues that the proof of work requires, for some reason, he just assigns his own values to the whole network and says that the proof of work requires too much computational power, which could be perhaps better used elsewhere in his mind. So your thoughts on this, but also explain to the audience, your work with on the selfish miner and what the cost of the selfish miner is and how to address that.
Yeah, well, I mean, the magic of the Bitcoin protocol is that the rules of the protocol are adjusted so that the individual interest of the miners, of the nodes, of people that participate in the network is to follow the rules. So this is the nice thing about Bitcoin and decentralization, that you can find this set of rules that align the general interest with the individual interest. Now, this is also some of the difficulty of decentralizing other things. I mean, if you want to decentralize, insurance of other type of businesses, you need to find a protocol for which the rules align properly, and this is extremely hard. It's not just saying that it's a blockchain. I mean, all these ICO projects and blockchain fantasies sometimes that people sell, that they are going to put a blockchain for insurance, etc. You need to put a protocol that really aligns properly. So what happens in the Bitcoin network, there are some natural rules that are not enforced. There's nobody to enforce it because it's decentralized. So there is no police, there is nobody that is going to enforce anything. People just behave in their self-interest, and it happens that precisely the self-interest is exactly aligned with the Bitcoin protocol. Well, not exactly. Indeed, what happens is that when miners mine a block, naively, you may think that you will release the block as soon as possible, so nobody takes advantage and release the block, another mined block before you. But you can ask, well, what happens? Selfish mining consists in keeping the block and keep mining on top of this block and take advantage over the official blockchain, so that when someone mines a block, you can crush his block by sending 2 blocks of your own. So this will crush his block. So there is some research done in really if selfish mining has an advantage, or what is the purpose of selfish mining, if the Bitcoin protocol is correct about this, or you can exploit it in that way, and so people found out that indeed you can take advantage of this weakness of the protocol by selfish mining, and the work that we did with my colleague Cyril Gunspan in France, this was pure mathematics, this probability, is that we pointed out that indeed the problem is in the difficulty adjustment formula that does not take into account orphan blocks that have, it doesn't measure, you measure the hash rate on just using the time that the blocks have been mined. So you look at the average over 2 weeks or 2016 blocks, how long it takes to mine 2016 blocks, and then you adjust the hash rate, the difficulty. But this is not totally correct. It will be correct if the hash rate will be constant, Well, essentially, what we found out is that this is a weakness of the protocol, but if someone tries to exploit it, we can just change the difficulty adjustment formula just to fix it. So in some sense, what was nice is that if you don't have any type of difficulty adjustment, then there is this exploit does not exist. So we prove this mathematically.
Yeah, but it's an average. It's an average over the 2-week period wherein the difficulty adjustment is set. So the orphan blocks may have an impact, but not materially.
Yeah, exactly. The problem is the orphan blocks are not counted in the difficulty
Right,
adjustment.
but it
So
doesn't
if someone
the
is
outcome
selfish mining,
materially. It doesn't have a material impact on the difficulty adjustment.
yeah, but it should have, because part of the hash rate is going into these orphan blocks. This is the problem that happens, that the way we measure the hash rate, and there is no other way. If we measure it only with the validated blocks, it's not accurate. It doesn't reflect the real hash rate.
Nevertheless, the outcome is sublime and almost perfect. And we saw a great example of this with China, right? They moved all the hash rate out of China. The hash rate dropped 40, 50, 60%. Difficulty adjustment kicked in for 2 successive adjustments downward. Yes. Blocks kept coming every 10 minutes without interruption. Now the hash rate's moving higher. So this would be trying to pick the fly shit out of the pepper, in my view. It doesn't really have a material impact on the difficulty adjustment. It doesn't impact the protocol whatsoever, and I don't think it's a valid criticism.
Yeah, but if you have a miner that has above 30% and decides to selfish mine, you will have a problem if you don't do anything.
But it's constantly decentralizing, and it will always decentralize, and and the concentrations are always broken up through the perfect incentive between the three basic core elements of the protocol.
People can make trouble using that, but even what is
no, they can't, because the incentive model prevents anyone making trouble. It doesn't happen. It's never going to happen, because the incentive is perfectly balanced, and it attacks humans in a perfect way, and it creates perfect money. But you can't apply physics to this because it's economics, and anyone who does is going to look like an idiot, like Nassim, the big fat idiot Taleb, who's torched his career because he's a stubborn asshole.
Well, I don't know. What happens is that the real attacks that exist is what you mentioned, is the 51% attack. I mean, if indeed what happens, if a miner gets enough hash power to do a selfish mining attack, like 30% or whatever, just increasing a little bit more the hash power, he can do a 50% hash rate and then do a 50% attack. That is a real threat.
It's just patently wrong. I mean, if you're talking about other chains like the hard forks, like
the Bitcoin chain could happen,
or the other chains, those are shit. That's like I went on the Champs-Élysées, and there was a counterfeit Gucci bag, and it's not real Gucci. It's a counterfeit Gucci bag, and oh my God, the whole Gucci empire is going to collapse because somebody selling a counterfeit Gucci bag on the Champs-Élysées.
Well,
no, that's not going to happen. Some idiot selling a counterfeit Gucci bag.
You don't care about minor attacks.
The Gucci empire.
You care about a country attack. The U.S. government may decide to do a 51%
They can't
attack.
do anything. The U.S. government does not have the computational power. They can't upset the incentive, and they're all paid in fiat money. They're all moving over to Bitcoin. They're not going to stick in a fiat money world when the fiat money is going to go to zero. That's not going to happen. Nigeria is going to eclipse the United States. If the United States chooses to put a bullet into its skull by banning Bitcoin, it's only committing suicide. That's not, I mean, if they're going to do that, I'm not going to stop them.
They confiscate all the mining hardware, and they get a pretty good hash power.
Okay.
Wrong. It's completely wrong.
Probably it's difficult to do, but this is the type of thing that is a real threat.
It's not a real threat.
There's all sorts of conversations about that, but we're nearing the end of this conversation. It's interesting debate. And obviously, Max is all fired up because of Nassim Taleb. Everybody is in this space, so it's like
but you take it easy with him. He's just doing his business. He has his audience. He sells the announcing the Bitcoin bubble crash. Okay, and then he tries to put it scientifically, but he fails. That's it. I mean, it's not that important. I mean, I don't think we should be mad at. He's not the first one to be just plain wrong about Bitcoin, and he doesn't know Bitcoin for a long time. I mean, just in 2020, I was explaining him how to set up a Bitcoin wallet. So I mean, it's not. Well, I mean, he's a newcomer in the field, and as many newcomers, he thinks he knows better.
Look, I sat down with Nassim in Ireland, in Kilkenny, Ireland, for an hour, explaining to him Bitcoin when it was under $50. Him and his wife. His wife understood it, by the way. His wife is 10 times smarter or 100 times smarter than he is. She's a genuine intellect. Nassim is a fool. And I explained to them under $100, under $50 for Bitcoin for an hour.
Yeah.
And he was like, oh, yeah, I want to do it. This is great. Okay. And then he blew it. And now, he's probably down to his last, nickel because he's been blowing it on French food and Lebanese cuisine, living it up. Now he's broke and he goes over and works for a competing piece of shit. But, the guy's a scoundrel. He's a scoundrel.
Yeah, well, I mean, he's just doing his business, I mean, that his audience likes this, and this is in the sense of what, let's say, the authorities, the financial establishment wants to hear, right? We have all news of this kind all the time, all this food that goes around that, I mean, now they have depressed the price just to try to make an accumulation period so that the institutionals can go in, right?
But Ricardo,
but the main problem they have is what you have in their t-shirt. Ricardo, we're not selling.
This has real human consequences. Imagine if Nassim Taleb was not a boring guy, a stubborn guy, and he was willing to be humble in the face of a mathematical genius, Bitcoin that it is. Imagine the good he could have done in his own country, Lebanon, by helping them go on to a Bitcoin standard. Instead, they're suffering and they're dying, and he could have helped them. But the blood is on him. It's on his hands now. He could have helped millions of people, but he chose to be a stubborn jackass. And now those people are fucking in the street starving. Thanks, Nassim, you freaking overrated piece of shit.
Yeah. But he thinks, I mean, I believe he thinks that he's saving people to fall into the open Ponzi Bitcoin scam. I mean, this is the first disagreement we have when he started to call Bitcoin an open Ponzi. This is nonsense.
Yeah, at the same time he called it that, he told the people of Lebanon that the central bank had things under control and to trust the banks. So he was wrong there. Yeah. And I think history in 20, 30 years time, he'll look exactly like Paul Krugman back in 1995, saying the internet will be no more important than the fax machine. So I think that's going to be the same situation for Nassim. But thank you.
Well, he may get the Nobel Prize, He's after the Nobel Prize. I mean,
true. He could win the Nobel Prize for this.
He could win the Nobel Prize.
Now he qualifies. He has this paper. He qualifies for it.
He'll be on the cover of Time magazine. It'll be Hitler, Taleb, right? Time magazine cover boys.
Then he will stop making jokes about Nobel Prizes. I mean, it's
true. But thank you for joining us, a group of idiots here, talking about, in the words of Nassim anyway, Nassim Taleb.
Well, we've been right for 12 years. I'm going to be right for another 20, 30, 40 years. I can guarantee you two things. Number one, the US dollar is going to go to zero. And number two, Bitcoin is going to go over 1 million. That's a guarantee.
So if the dollar is going to zero, it should be zero right now.
It is. It is zero right now for people who are suffering from the consequences of 0% interest rates and hyperinflation and lack of distribution and the criminal wave of central banking. They're dying. So for them, it is at zero. They're dead.
Yeah, you know what is going to be the turning point is when people start to think his wealth on Bitcoin terms, not on dollar terms. I mean, the usual, the economists all got wrong about Bitcoin because it doesn't fit their textbook of a currency. And one of the definitions that should be a unit of measurement of value. And well, of course, in Bitcoin has a natural volatility because it's just a currency information, so it's an evolution. And the moment when people and traders do realize that they trade, I mean, Bitcoin traders, they trade to have more Bitcoins, not more dollars. And what you want is to accumulate Bitcoins, and it's your standard, your reference. And when people in the street start to have Bitcoin as their reference, this is hyper Bitcoinization. This is the turning point.
That's a good point to end. That's coming.
It's already in Nigeria. It's already happening. And also in El Salvador.
Yeah.
Yeah, in El Salvador, people, their currency did disappear. So of course they can use the dollar, but then they are controlled. The dollar, after all, is controlled by the Fed. So why they wouldn't use Bitcoin instead? I mean, that is not really controlled by anyone, and it's predictable. We know how many Bitcoins are printed, are created at every moment, and how many we have. It's a predictable currency, and all these fiat currencies that are not predictable create an instability. They have an instability in their nature, I mean, and this is pretty simple to understand. And then you can write whatever equations you want. But the reality is that if you write proper models, they should reflect that and not the opposite.
I don't need a model to tell me that Bitcoin's gone to 1 million. You know, you need to go back to your library, wherever it is, and where all those physics books are on shelves. Take a gallon of gasoline, pour it on the shelves, and ignite it, and burn this shit down, because you're poisoned your mind. You can't see the forest for the trees.
You confuse bad application of science with bad science. There are very good science and there are very good models that do not fit exactly to the reality. But as long as you understand what are the limits of the model, you are fine.
Well, Isaac Newton was an alchemist, right? And he had 1 foot in alchemy, 1 foot in modern science. Bitcoin puts us back into alchemy. It turns greed and hatred into altruism.
Absolutely.
It's an alchemical reaction based on human emotion. And no freaking
mathematical
overrated
alchemy.
Jackass author from Larchmont, New York, where I grew up, understands that, and we shouldn't listen to him. He should go back and get his plate of black squid linguine and eat himself and gain another 30 pounds. Nassim, you fat fuck.
Jesus. All right. I like that. Good ending on mathematical alchemy. I think it's
mathematical alchemy. It's part of it's our birthright as humans to enjoy perfect money. We've been waiting 400,000 years for this. Before even mathematics existed.
I think people that criticize Bitcoin is because they haven't studied it deep enough. I mean, of course, you can improve and you can have other currencies, cryptocurrencies that have better properties. But, the standard, the simplicity of Bitcoin is also what it makes it anti-fragile and something that will live for many years. I mean, we will see it.
Okay, that's a good point to end. Please don't start shouting again, Max. And we're going to go, Max and I need to talk about this supermodel analogy he used. And
let's talk about it.
Yeah, okay. See you. Okay. Thanks a lot.
See you.
Bye.
Thanks to you.
All right, well, that was pretty fun, wasn't it, Max? Hey, by the way, you know what? While we learned a lot from that professor of mathematics, a teacher, guy who knows his stuff about maths, as you say in the UK, I got a new camera here and we're trying this out, that A6400 that we used on the live stream. Well, I'm using it here too for the Orange Pill podcast for the first time, the full dose. And hopefully this cuts together. Does it? Does it? Does it? Does it? Does it? Does it?
Mm-hmm. Mm-hmm. Well, I saw images from this camera earlier and it looked good.
Okay, don't be too excited about this, Max.
I saw the images from the camera, and it looked good.
Right. So we this is the wrap up here of this episode. I hope you enjoyed it. We are brought to you by swanbitcoin.com. Of course, if you were happy to be stacking over the past few weeks, we've been lucky to have that dip from March through July, and everybody was able to stack daily, hourly sometimes. Some of us were lunatics stacking. swanbitcoin.com/orange pill. I was stacking all the time.
Yeah.
And every time I stack, it seems like it goes up. So I think it's me. I think that's the relationship between Bitcoin prices and Stacy stacking.
Hi, I'm the Swan.
And of course, next week is our 1 year anniversary of the first episode of Orange Pill Podcast. And we're also going to Phoenix for the fuck Elon tour. It's become the fuck the elite tour. What is it? Fuck the Davos man.
Bitcoin
tour.
is fuck you money tour.
The Bitcoin is fuck you money tour. Yeah. So it's that George Carlin theory of fuck all the heroes, right? Fuck every hero. Fuck them.
Fuck all your heroes. Fuck
and so there are like 5 or 6 tickets left. Just underneath this video, you'll find the link to the Eventbrite, and there's a few tickets left. We're going to have some tacos. We're going to have some beer. We're going to have some giveaways, loads of giveaways.
Taco pleb.
We're going to have taco plebs. We're going to give away some lightning notes, some hardware wallets. We're going to give away some tickets to Bitcoin 2022. All of that is included in the price of your ticket. The night before, this is not included, but the night before, we are going to have a meetup in at Crypto Classic Pizza or something like that.
Classic Crust Pizza
Classic
in Phoenix,
Crust
Arizona. It'll get you zooted as tomato.
Right. So, yeah. So anyway,
Smoke
to sum
on
up,
the water.
Okay. Good thing that doesn't sound like anything. To sum up, we said that the legislation that they're passing is to nail shut the escape hatch. So in a way similar to what China did to prevent people from escaping their apartment buildings, or at least according to those videos that were released early during the pandemic. Who knows actually who released those? We see, as a result, we're seeing that similar situation here in the United States. They're trying to nail shut the escape hatch for any American who hasn't yet figured it out how to escape from the fiat system. So it might be too late to climb aboard the life raft before Panopticoin is introduced, or surveillance coin from the CBDC, the central bank digital currency. We see that they're sticking it into this infrastructure bill, which is another giveaway. There's $1 trillion giveaway to Lord knows which oligarchs will be, stealing most of that. Like, of the trillion, expect about 50 billion, maybe 100 billion if we're lucky, right, to trickle down to the rest of the economy. All of it will be sold in kind of a pre-mine situation, because this is what all these stimulus packages are, pre-mine situations, right? They pre-mine $1 trillion. They keep 90% for the insiders, the early investors, and these, and all these corporations and the PMCs and LLCs in Virginia, Washington, D.C., and Silicon Valley and New York City.
Quick side note. One of the reasons they hoard that money and only trickle out a little bit is so the economy continues to wither. And so they can go back to Congress and say, look, the economy is withering. We need to print more.
True.
Right? So if they released it all, then the economy would actually recover and they wouldn't have to print anymore, but then the plutocrats wouldn't get all the free money. So the reason they don't circulate it is not only do their asset prices go up, but they get to justify more printing.
The escape hatch is being nailed shut. I was noticing a local story in North Carolina. There's an island called Knott's Island. It's in the Outer Banks. It's on the northern bit, closer to Virginia. And you can drive off the island, but it takes about an hour to drive north and go through Virginia and then come down to the mainland. Otherwise, there's a ferry that goes back and forth. Well, the ferry services have been slashed to the Outer Banks because there's no labor. People don't want to work. They're getting so much of these airdrops that they're deciding they don't want to work. So again, people being stranded, there's stranded assets all over the place, stranded energy, stranded wealth. And the central banks don't want you to have any sovereignty. They don't want you to find a way to monetize any of that. They're stranding you. Everything is stranded in terms of a fiat airdrop system, of a proof of stake
Right,
system.
just like those floods come in and people are stranded and they're standing on the top of the house and help, save me, the flood is here.
Yeah.
Same thing with fiat money. They flood the fiat money into the system and it strands people. It doesn't help people.
Yes, this is the misallocation of capital and the fact that they don't have any plan, but they're conjuring up a new, pre-mine coin. This proof of stake Panopticoin is coming. Unfortunately, everybody makes their own choices, and there are people who love the soap operas on MSNBC, CNN, and Fox, and they're distracted by that, and they're focused on that, and they're like, down with the other team, I hate the red team, I hate the blue team, I hate them, and they're part of the gulag. They don't know that the Panopticoin, they're all fighting over Panopticoin. I have more stake in this because, I'm a blue member, and the blue members, as Hillary told us, are the winners, and the other people are the deplorables. Give them less of these free money tokens, right? So this is like the state of play in the rest of the world outside of the orange pill citadel. Like, this is what they're fighting over. In the meantime, we're just sitting back and as Max articulates quite often on his Twitter stream, is like, they can't touch Bitcoin, and they've stated it now. They're basically saying they can't touch Bitcoin, right? That this is why there isn't a carve out for Bitcoin, right? As some people are saying, as some more shitcoiner sort of people are saying, that, what? There's a carve out for Bitcoin? It's like, Yeah, because they can't touch it, right? They can't. They literally can't touch it.
It carves itself out.
So the wording makes it seem like they're being benevolent. Oh, so we're going to let Bitcoin get away with it. And it's like, no, you're not. Bitcoin told you that you can't do anything. And so they pretended like they could, if we wanted to, we could touch it, but we can't.
You got regulated by Bitcoin.
Yeah.
You know, watching it, it's like watching Crips and Bloods play badminton. You know, it's just all these powerless, weenieless politicians getting tough with each other on the badminton court. Ooh. You know, hey, man, guess what? You're on an island that's sinking. Ha ha.
Well, before it's too late, unless you want to make a choice, you can be in Panopticon land. You can be in surveillance coin land. If that's your choice, they'll give you a lot of free money if you're a good citizen, and maybe you squeal on your neighbors, maybe you tattle on them and say when they're, they haven't had their COVID vaccine or something like that, you could tell on them and you might get some free coin. So maybe that's the system you want to participate in. Bon voyage. Have a nice journey. Hope you enjoy yourself. But, before it's too late, go to swanbitcoin.com/orange pill, stack some sats while you still can, before the surveillance coin is the only option for you, that you can't spend your dirty fiat that you only have. That's not even an option for you. You only have your Panopticon.
So well said. Well said. I'm looking forward to this episode, having just recorded it. I can tell you it's a banger.
I wonder how it is.
I think it's good, but I will let you decide. You're the viewer. You're the audience. You're the target. Goodbye.